Hi guys, welcome back to X and Yong channel. Today I'm standing outside of the world's first floating Apple store, which is at Marina Bay Sands, Singapore. Excitingly, I have made a reservation to visit the store at 8 PM later. Let's go inside and have a look. Went in public in 1980 at $22 per share. On a split-adjusted basis, it was only 11 cents. Today, Apple price is more than $120, becoming the first company that break the $2 trillion market capitalization in American stock history. It is undeniably recognized as one of the fastest growing tech stocks. This is a company that designs, manufactures, and sells smartphones, personal computers, tablets, wearables, and accessories worldwide. The first iPhone was introduced 13 years ago in year 2007 by Steve Jobs. The competitive advantage of Apple is it has a strong buyer power. Most components are from multiple sources, with substantial manufacturers are in Asia. Recently, Apple is making transition to produce its own processor chips for Mac laptops, which is called the Apple M1 chips. Apple is pushing its boundary to produce better laptops, which its previous suppliers can't keep up with. Consumer has higher cost of switching from Apple to other products because of the different user experience. If a consumer is already having a few Apple products, it becomes more difficult to switch to other products due to different operating system. Why would I say Apple is a powerful company? Let's take a look at their performance over the past 5 years. Sales by category. Obviously, the best-selling products of Apple is the iPhone, account for more than 50% of the total sales for the past 5 years. Note that the annual report 2020 sales revenue has not yet included the sales of the recently launched iPhone 12, the first iPhone that used 5G technology. From a quick look, iPhone sales had a downward trend in recent 3 years. Nevertheless, the increasing revenue trend is due to the higher revenue sources from Apple services and other products such as the wearable, home, and accessories. Services include Apple Care, cloud service, digital content, and payment services, which contributed to 20% of the revenue in 2020. With that, Apple has mounted a corporate strategy to accelerate its services revenue. Apple products has pretty high gross profit margin, constantly at about 38% for the past 5 years. It is quite amazing that Apple has the power to adjust its price that consumers are willing to pay for. This company has really good marketing strategy by focusing on users' experience and promoting its complementary products. So if you got a new iPhone 12, you might be thinking of getting an AirPods Max or the new Apple Watch. Apple is indeed profitable. Its EPS, earning per share, is having an upward trend. From the management point of view, the ROE, return on equity, is always above 30% and reached 70% in recent years. This means the management is able to generate more profit with less shareholder equity. Now we know Apple is a good stock. So, should we buy it or not? It is only wise to buy a good product at a reasonable price. If we are using DCF, discounted cash flow model, the present value of Apple is less than $1 trillion. It is considered overpriced from its market cap at $2 trillion. If you look at the EPS CAGR rate at 7.4%, it is clearly not that attractive compared to other IT stocks, which is an average of 8.3%. The higher the growth rate, the higher the intrinsic value of the company stock. However, keeping in mind that valuation should not be the only factor when it comes to decision to buy or not. The growth rate can change dramatically. it is still important to understand how the business model able to generate more profit over time and be sustainable in the future. Consider Apple's experience ecosystem and its future potential in selling. Well, it has been proven that Apple has its competitive advantage and is in good financial health, but it may be a bit overpriced at the market price of more than $120. Should you go ahead or not? My personal thought is to be ready when the opportunity comes. So stay tuned!